Well, it's Friday, and you know what that means. We have the Jefferies Chris Wood's Greed and Fear latest report. Now, they remain bullish on India, which is the key positive takeaway of this report, and they also remain overweight on the Asia-Pacific region, which India falls under. In fact, specifically for this region, their portfolio will see a 1% hike just this week. India's cyclical recovery has taken place in a marked absence of huge fiscal stimulus. We've not done 10% of GDP or 20% of GDP in actual stimulus like the Bank of Japan or America did yet. If you look at the way our equity markets have sustained and the way our economy has recovered, it's been quite surprising to say the least. They like that, and India remains as good an opportunity as any with great long-term potential in their view. Also, one more thing they like is that the cyclical recovery is broadening out. So it's not just a narrow index-based rally where you're seeing the large cap stocks, which are extremely high quality, perform. You're seeing a whole host of names from the broader markets, the small cap index, the mid cap index, really pull their weight. And a lot of those stocks have gained even 200 or 300% since the onset of the pandemic. Last quarter also saw a sharp uptick in residential property sales, and that's something that Greed and Fear likes, and they might be looking at the residential space a little more closely now. Barring that, they believe that financials are going to continue to do really well, because in any kind of cyclical circumstance where we're going to see a cyclical-oriented rally, financials will play their role in providing the much-needed credit. Also, they are the heavyweights in the index, and they are, in a sense, viewed as good peers for the cyclical stock move. So they remain overweight on their 6% position in HDFC. They do not intend to trim it, although it currently trades at a lifetime high. If you look at the bank indexes in Europe, they've done tremendously well. Even if you look at the bank index in Asian countries, they've done tremendously well. So they expect that to kind of trickle down here. They've also held conversations recently with various government officials, and they're very positive about the fiscal stance we're taking and that we aim to meet all our obligations on the various parameters that have been set. Finally, they continue to remain bullish on India from an earnings perspective. So if you look at Nifty right now, Greed and Fear says 21.6 times 12-month forward multiple might seem expensive on the face of it. But then you have Mahesh Nandurkar, who is the head of India research for Jefferies, who thinks that these select baskets are actually capable of delivering earnings to the tune of 30% or more. So if you factor that in FY22 and then 13.2% real GDP growth, which is also something Greed and Fear is building in for FY22, that multiple looks like it could compress, and hence we have room for a lot more upside from here. So key takeaways from Greed and Fear is that they remain bullish on India. They're going to be hiking their weightage over here by a whole percentage point. They continue to like financials, no trimming over there. They continue to favor the cyclical play now, and they're going to see a lot of movement into those kind of stocks.